My name is Andrew Neale, Vice President of Chemicals at S&P Global, and today I'm going to talk a little bit about what we're hearing and seeing from a petrochemical perspective here at APPEC. So the three things and themes that we're looking at across our petrochemical spectrum are around demand. So first of all, the volatility that we've seen over the past 6 months. We've seen demand be destroyed, quite frankly, by the tariffs and trade movements that we've seen around, driven by the US. We think there's probably about a quarter of our growth this year has been lost through that. But now that we've gone through Q2, it does seem that volatility is subsiding and we're starting to see supply chains move back to a little bit more normality. Freight rates are coming down, so therefore we're pretty optimistic for that demand in the short term starting to recover. And longer term, we still are fundamentally bullish around petrochemical demand growth continuing. It's not going to peak as we're seeing in some of the upstream sectors. Talking about capacity number two, we are seeing an increase in rationalization. So it's starting to gain pace, starting really from West Europe. We're seeing increasing numbers of global players start to announce they're going to close crackers in particular. Just last week, we saw Exxon announce that they're looking to get out of their various assets in West Europe. It's the same over here in Asia. Japan, Korea are all expected to close assets. Some of those are announced already. Some of those are to be announced. Globally, we're probably about 6 million tons of ethylene capacity, which is going to come out of the system. That is going to bring forward the recovery from this sort of lengthened trough that we're going through in the petrochemical world at the moment. And thirdly, when we're looking at the energy transition, it is delayed. We are seeing those sustainability goals pushed back. We're also seeing, with the glut of virgin material that we've got around, the disparity in virgin prices against recycled prices means that that's only pushing more demand for virgin material. But it fundamentally is a part of our petchem cycle. So by the end of this decade, we do see that demand for recycled material, be that mechanically recycled and increasingly from a decade onward, is going to be more chemically recycled material. That is going to be a fundamental part of our supply picture. So longer term, we're still pretty bullish around what the energy transition means for petrochemical demand. So demand growth is fundamentally pretty strong. Capacity is starting to close quicker. And then longer term, that energy transition is going to support the petrochemical world. Thank you very much.